welcome back to the Local Loop. Today, I am so pleased to bring to you Jay Tolisano from CrossCountry Mortgage. Hi, Jay.
Hello, Joy. Thanks for having me. Appreciate it.
Sure. So before we start, let's just timestamp this video because it's April 10th, 2020. We are in the middle of the pandemic, unfortunately, and gosh, first and foremost, I hope everybody is safe and healthy and that you're watching this in your home. But Jay, I was hoping that we could just kind of talk about what's been going on in the mortgage world and the real estate world since the beginning of the spring market that we thought was going to take off and skyrocket. We were all excited for a great spring season, and then this happened. So
Well, yeah, and it's kind of interesting. I've been doing this for a long time, as you know, and there's always different things that can affect a market, right? Like if we have a really bad winter and a lot of snow, our market slows down, right? I don't think our kids had one snow day this year, right? And the market was just like coming out of the gates and really on fire, right? And then all of a sudden the pandemic creeps up at the beginning of March, at least in our area, pretty significantly. And obviously it's had an impact on what's going on.
absolutely. So first let's talk. Unfortunately, because of the pandemic and COVID-19, there are a lot of people out of work. And so I'd love to talk about mortgage forbearance because I think that affects a lot of people.
Yeah, so mortgage forbearance is not known, it shouldn't be known or thought of as mortgage forgiveness. It's not mortgage forgiveness, and that's a lot of like kind of what the misconception out there is, right? So while I won't go giving exact direction on what someone should do with their loan, the direction that I would give is that they should talk to their servicer. So the servicer is the company that they pay every single month. Okay. There's a phone number on the statement or on the coupon, and they really need to call their servicer and get guidance from them on what forbearance means for them. Okay.
As a general rule, like how does it work?
Well, so unfortunately, just like the mortgage business itself, nothing is exactly the same. Okay. Everything is different, right? So I'll give you an example of what mortgage forbearance could look like. And this is not what I think most people would want to get into. Hey, Joy, we're going to give you the next 2 or 3 months where you don't have to pay your mortgage. But come the 4th month, you owe us for that month and the 3 that you skipped.
Oh, wow.
So almost like a 4-month balloon payment, right? Mm-hmm. So that's an example of something that I've recently seen that was offered to a customer. Now, I will tell you, I was on the phone with a customer today who was considering a refinance. Yeah. And as we're talking, they were talking about the fact that they are considering a deferment or forbearance from their mortgage company. And I said, okay, did you pay your April payment yet? Because today's April 10th. Most times you're late if you don't pay by the 10th. It depends on your timing. But and they said, oh, no, we paid our payment at the end of March, so we were good for April. And I said, all right, well, what are your plans? Well, we're waiting for the documentation to come in the mail. Okay, what did your servicer tell you? Well, they didn't tell us anything other than that they would offer us deferment. The problem there is until you see it in writing, you don't know what you're getting. So what I would always tell people is, I tell them this whether they're buying another home, whether they're refinancing, or even in the case of forbearance, always pay your mortgage on time until you know what's next, right? So just because someone's saying, oh, we can offer you deferment or forbearance, don't stop paying your mortgage because you just don't know what that's going to do to you.
Right. So, you brought up a good point, appraisals and refinance, because I feel like everyone was trying to refinance when rates went down. And I remember we even had a discussion and you were like, gosh, everyone thought that, because the Fed lowered interest rates so much that that they should refinance. And mm-hmm. So what's going on with that now? Because I know people, like, we can't get appraisers into houses.
Yeah, so first and foremost, at the end of February, beginning of March, rates dropped significantly because of what was going on. I'll call it at the very, very early stages of the COVID virus here in the United States, right? Money was coming from stock market flowing into bonds and mortgage rates dropped. The next week thereafter, mortgage rates skyrocketed. There was a lack of liquidity. And I think 1 or 2 Sundays after that, the Fed came in and said, we're slashing rates to almost zero, right? But that wasn't necessarily mortgage rates. So rates went down, up, right, down, up, and then took a while to come back down. And the decline that we've seen in mortgage rates, specifically on mortgage rates up to $510,000, okay, which is the conforming loan limit, that is due to the Fed buying into the mortgage market, buying into the bond market, okay? That's what's driving those rates to be low. Now, real quick topic before we move to appraisals is loans over 510,000. So
Yeah.
either high balance conforming or jumbo loans, those rates are not as good as they were previous in the year. So the loans that are benefiting right now from the Fed is loans up to 510,000 in our market. That's the conforming loan limit.
Got it.
Okay. Now, appraisals. A bank's preference on an appraisal, no matter the product, is always to do a full appraisal in the home.
Right. I
Right.
was supposed to have one actually today, and the appraiser called me up and he's like, you know what, now our bank is just doing drive-bys, so we didn't have to do it, which I was glad about. Yeah.
Yeah. So depending on the bank, depending on the situation, the preference is always to come in the house.
Mhm.
However, we are getting appraisal waivers on some of our transactions where our system will tell us that there is no appraisal needed at all. Okay. Now, of course, we always go to the consumer and say, are you okay with not getting any sort of appraisal? Because it's really their choice. Okay.
Right.
A lot of them will opt to use the appraisal waiver, not to mention it saves them $400 or $500.
Oh,
Because if they're a home buyer,
yeah.
they usually have a bit of trust in their agent, i.e. you or someone on your team, that, okay, the value that I'm paying is accurate for the market, or else Joy and her team would not have sold me this house,
Right.
right?
Got it.
Now, if we don't get an appraisal waiver, we can have the opportunity to do a desktop appraisal where the appraiser does his or her work via desktop, researching online through the town hall. And sometimes it's a drive-by appraisal where the appraiser will drive by, get out and measure the home, grab the pictures from the MLS. So yes, due to the COVID virus, so that we don't infect people in the home, or the appraiser is okay with it,
Yeah.
we can do these options. I will tell you, if it's a vacant home and no one's there, there's really no reason why it can't be done, because the appraiser can wear gloves to get in the house and
Right.
there's no one to infect anyone. So
Yeah.
it's not a one size fits all, just like the mortgage and real estate market. But
Yeah.
yes, the standards for appraisals have loosened a bit.
So you and I have talked a lot in the past few weeks because it seems like things are changing day by day, hour by hour, with everything. And you know that I was supposed to have a deal that was supposed to close 2 weeks ago, where the buyer did not go through you, but there was a problem because it was a non-QM loan. Uh,
Yes.
so tell us what's going on with the non-QM world, non-agency, and jumbo loans, because I think most people are interested in the jumbo loans, and there's been a lot of talk about how everything is dried up now.
Yeah. So the non-agency market is your jumbo market, right? And the jumbo market has tightened, and there's a lack of liquidity in that market right now. So let's just start with jumbo financing, and this will tie into a few things that you and I discussed earlier. But
And for
some
people who don't know,
lenders,
what is jumbo financing?
sure. So good point there. In Fairfield County, we'll talk about Fairfield County. Jumbo financing is anything over 601,450. So 601,450. That's our high balance loan limit. I know it's an oddball number, but it is what it is. We don't create it. Anything over 601,450 is jumbo. Okay. So there's a lack of liquidity in that market, which is holding rates high. It's also something that is causing lenders to change their guidelines. Okay. So they might do a few things like cut down their loan to value. What does that mean in simple terms? Require more money down.
Got it.
Okay. They may require additional reserves for the program. Okay. So if before it was a 6-month reserve requirement, maybe now they've increased it to a 12-month reserve. Reserve is the money you have in the bank after you close the loan. So if your payment is $5,000 a month, and they wanted, just let's say hypothetically, 3 months worth of payments, that's 15 grand.
Right. Now they
Yeah,
want
15 might be 30 or 45, and we're just using round numbers, okay? So things like that have changed, okay? Guidelines around interest-only products or the interest-only market, that has changed as well, okay? One market that I'm still happy to be able to offer is putting down less than 20% up to like a $1.5 million purchase price,
Wow.
okay?
Okay,
A
so
lot
a
of
jumbo
lenders have done
loan.
away with it.
Okay, because I had heard that jumbo loans that you had to put 20% down, but you're saying that there are products out there that you can offer that.
Correct. And the misconception or the information that you heard is you're not the first person to tell me that this week.
Got it. Yeah.
So there's no one size that fits all in the mortgage market. And the reason why I enjoy being at a company that I'm with is because we have many different lenders underneath us. Okay. Now, to comment on what you said about your client who was supposed to buy that home,
Yeah.
where the program went away, that client was using a non-QM mortgage. So to put it in the simplest terms possible,
Yeah.
a QM mortgage is a mortgage that fits inside the box, okay? And QM stands for qualified mortgage, okay? And those were the standards that were released after our 2008 crisis, okay? A non-QM loan is a loan that was developed over the last, I don't know, maybe 5 to 8 years. That was a loan that fit outside that QM box. Okay, so it had different guidelines, and really what it did was
what a non-QM loan would be. Like who would
yeah.
do that?
So a non-qualified mortgage loan would be the following. Let's say you have a self-employed borrower that couldn't qualify based upon their tax returns,
Okay.
but they could qualify based upon the cash flow of their business by a
Small business owner who, yeah. Okay.
yeah, like I mean, someone that has good cash flow, but if you looked at their tax returns, the numbers wouldn't add up, right? But they had the cash flow to be able to service the debt, the mortgage debt. You could do something for a client with that product.
Mm-hmm.
Once the market dried up and there was a lack of liquidity, those products were the first to go away because candidly, they were the riskiest products in the market, right? So in a time like this, the risky products go away. Now, if you look back at the 2008 crisis, that crisis was a financially driven, mortgage related crisis.
Yeah.
And that's when things dried up then. This is a crisis caused by a virus, right? But it's affecting the financial market.
Right.
So it's a little bit, it's same in the effects that it's having, but it's different because the financial markets didn't cause it.
Right. And even though, the guidelines changed last week, 2 weeks ago,
2 weeks ago, 3 weeks ago,
things could change next week also, maybe to open it up a little bit more.
Yes. So what I have been telling realtors and also consumers is, hey, listen, you're out shopping for a mortgage. You're out shopping for a home. We've given you a pre-approval or pre-qualification letter, depending on how they were structured. If you go out and you don't shop for another home for 3 weeks, 4 weeks, give us a call. Contact us when you find every home. I mean, Joy, I was dealing with a consumer this week.
Mm-hmm.
I talked to them 3 weeks ago. I went back to the program this week, pulled up the guidelines to double check. And remember that reserve requirement I talked about a little while ago?
Yeah.
The reserve requirement was 3 months. It went up to 9 months.
Wow.
It tripled, right? And I'm glad I checked because we would have been caught dead in our tracks. I mean, luckily I had another lender to go to, so I wasn't completely stopped.
Mm-hmm.
But those things can happen, and they are happening.
Oh yeah, and I hear they're doing employment checks like the day before the closing, just to make sure,
Yeah, so on jumbo loans, we as a company are doing them day before closing, okay? Yeah. But we're working with the client, we're working with the attorney, and we're talking it out, right? It's not a game change. It's a game changer, but it's not a showstopper, okay? So yeah, and I mean, the other thing too that we are doing and a lot of lenders are doing, if we had a bank statement from February, that bank statement can look very different, right? I don't know if you've looked at your investments, but the market's taken a hit, right? So you have to re-verify assets. So my advice to, and I know we already talked about this, but my advice to anyone shopping for a home is revisit your pre-approval or your qualification with your lender. Make sure you're still there.
Right. Because that piece of paper doesn't mean anything now.
Correct.
Yeah. So Jay, there's a lot of other agents that watch these videos. And so some of them have some deals in the pipeline. What questions should they be asking, say, the buyer's agent or the buyer's mortgage broker to make sure that this deal is going to go through so that they don't
Yes.
have
So I'll
the anxiety that I had last week, which my deal did close last week. So I'm
Oh, good.
yesterday. So it did close. Yeah.
Good. Yeah. I mean, so first things first, when was this pre-approval issued, right? When was it issued?
Mhm.
Has the buyer gone back to their mortgage person to make sure that the program still exists? Okay.
It's going to get funded, right?
Correct.
Yeah.
Has anything changed with their employment?
Right.
Okay.
Mhm.
I had a customer, this is true story, customer that's buying a home closing May 15th. They work in healthcare, so their job is protected.
Right.
Okay. But they were thinking about cutting their hours just because of some family obligations, right? Kids are home now. They didn't have to do it, but they were thinking about doing it. And they called me and I said, whoa, 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 whoa. We got to talk through this, right? We got to see how it affects you.
Right.
And it's going to be fine. But the reality is you have to have open lines of communication. So what I would say is the pre-approval current?
Mm-hmm.
Have the assets been reviewed? Have they talked about employment? Like a lot of people are being furloughed right now, right?
Yeah.
Have they talked about employment? Have they looked at their debt ratios and has the program changed relative to debt ratios, right? I mean, there are a ton of things, but I think the biggest thing that needs to be done biggest thing today, look at the pre-approval, talk with your lender, make sure you're still okay. But as we move forward in the next few months and we get through this pandemic,
Mm-hmm.
I do believe there's a lot of pent up demand. I mean, you've probably seen it. People coming out of New York City to rent in Connecticut or in Long Island, right? People are fleeing from their 1,000 square foot apartment to get some space in a yard.
Yes. And I mean, the bottom line is we are essential. Real estate makes up about 17% of the GDP. So, I think, people need to move also, so that even though we are pretty much working from home and doing everything virtually, there are definitely people that we're helping that need to move in the next 30 to 60 days. And we're just, there are certain protocols that we're taking.
Yeah. I mean, I'm doing a purchase transaction right now for a customer who never saw the home.
Oh, I believe
Did it
it.
all,
Yeah.
virtually, and candidly, they knew what they wanted. They knew where they wanted to be. They never saw the home. They can't go see the home for various reasons, and it's happening. It's coming together. So I think you'll see more of that. But as we move forward through the summer and into fall,
Yeah.
I have visions, and I hope part of me hopes this is the
Let's hear
case.
predictions. Yeah.
I have visions of it being a very active market,
No,
right?
I think so too. I think
Oh,
summer is going to be our spring. Yes.
almost to the point where I think you might see those deals be written on the hood of a car again, like many years ago. So to that point, what I would say is make sure you are pre-approved, make sure your ducks are in a row, right? Always be ready and always be in communication with your lender, because I do see that we're going to have a very big spring season, whenever that might be.
Yeah.
And if you're not ready, you're going to be battling against another offer. You've got to be ready, right? So I hope that's the case. I know you do as well.
Yeah.
Connecticut has a lot to offer, and I hope we see more people coming in as a result.
Yes, I hope so too. Yeah. Well, thank you, Jay. This is always helpful. I think it makes sense, like you said, for people if they are thinking of making a move to get their ducks in a row, so that they're ready to go.
Yes. Stay in close contact with your realtor or your lender, right? Also not a bad idea to have a really good, solid attorney on your team that knows how to navigate these waters and protect you, right? So let's hope for a very good year. Obviously, I think we're on pause, so to speak, right now. Not complete pause, but just a little bit of a slowdown, so to speak. But always a pleasure talking with you, Joy. Thank you.
Okay, thank you, Jay. See you later. Bye-bye.
All right, thanks. Bye-bye.